Welcome back to Freedom Algo. Today is October 30th, 2024. This is the chart lesson for the ES 2000 tick chart. And even though it was a pretty wild day, the volume was actually lower than you'd think. So these bars took a little bit longer than normal to print. So I do want to call that out. And I will say there's a lot of trade setups today, but a lot of them are advanced setups. So there's a few blues in here. I don't actually have any reds marked. There's maybe one or two that you could argue could be red, but we'll get to those anyway. So basically, this is what we had. Overall, it was kind of a range day. And I will show you kind of how I drew everything in just a moment. Basically, we had this big down channel, big up channel, range, measured move on the bottom of this range, and now it's kind of stuck in here. So this all could just be one big range in here, but I'll show you how this looks. So right here, we had a big up channel working down from the overnight. Now there's a couple of there's some micro channels in there that I drew. No big deal on those. So let's zoom in here and go through some of the setups. So the first one is right here. And basically you have this down channel working. This is at about 6 in the morning. There wasn't really much trade setups up here, as I think 5 in the morning was somewhere over here, depending on what time you start. So I didn't really see any good setups until this one. And basically this one was it's a mediocre setup. All that you really have here is a spike and channel pattern. You wouldn't have known that this big channel is in play yet. You might have had it drawn off of the swings, but you didn't come back to it yet. So I was looking at this as kind of like a range, spike, and then this sort of channel. And so in the channel, you come right off the top of the channel right here. And this one, the way you could look at this basically as so you have, let's see, from this high. So you have these highs over here, right? And you could kind of call this a first entry, pullback, second entry. So this is a new high on the second entry. So now you count from here. First entry, second entry, failure. So it's just a failed second entry long. You don't have a lot of room to the bottom. That's why it is marked green. If you had more room and it was off the EMA or something, then I would probably mark that one red. Okay, breaks down. You end up in this kind of sideways action here. Not really much going on. You end up breaking out the bottom, have this tight channel up. And then you get this close outside that gives you a first entry and then a new high, second entry short below this candle. Again, this one would be marked red if this didn't have this big stem on the bottom and the EMA here. It is off the trend line, so this is one that's debatable. You could argue that this one is actually a red. So I'm going to leave it like that, but it just, because of the way that this candle had stem on the bottom, I didn't love it. So that's the thing. If this had finished a little bit more bearish right at the EMA or something, then I'd say, yeah, go short right below that. But it just didn't work out that way. I had this possible support drawn here. So you just have this tight channel. So anyway, this confirmed that wider channel. And you end up breaking down and having this really tight channel. Now, unfortunately, there's not really any way to enter here. You just don't get a good entry candle. So you kind of just, if you weren't in this trade from up here with some kind of a runner, you kind of just have to watch this go without you. But if you did catch this trade, you were pretty much done for the day. So anyway, it comes down, you get a close outside and a new low. And this one here is basically a second entry long. So from this high, it's a first entry, second entry long right there. So there actually is, sorry, second entry long there, and then this would actually be like a third entry. So scratch that for a second. But the thing is, basically all that this is a close outside and a new low. Now you might get another leg down, so that's why it's a green. You're basically trying to pick a bottom. You are far from the EMA, but the higher low is the better play, which comes here, and that's the blue trade. So yeah, this is just basically a close outside and a new low, but sometimes you get a second leg down, so that's why you got to be careful with those. Ends up coming up. There's not really any way to enter this because you don't know here if this is going to fail at the trend line, and it ends up getting stuck there for a second, pulls down here. There's actually a first entry, second entry short failure that goes above, but you can't really take that. You're at the top of the trend line. You don't know for sure this is going to break out. It ends up breaking out and going up though. And so now you kind of just have to watch this. Again, there's not really any setups in here. You could argue that there's a second entry long here, but it's too close to the highs, so you just can't really take that. You're just kind of getting real tight here. Eventually, when you see that this is a strong trend that kind of gets a little flatter up here, you can kind of see it's a strong trend. Then you might decide to take some of these, and so you end up with a second entry long above this bar, but it's kind of an inside bar, or not an inside bar, but this bar ends up being an inside bar next to it, so it could be congestion. But again, it's a strong trend, so if you took that, I wouldn't be too mad about it. It's a low risk. It's a 7-tick bar. Comes up, you get a close outside, and this one is interesting. You basically get a first entry pullback, second entry long if it breaks above this bar here. So it's kind of like a higher low, second entry long. It's been a strong trend. You're expecting a new high, so if you scalp that one, that's a decent trade. You then get into the sideways consolidation stuff. Now at this point, there is a range that formed. Originally, I had this drawn a little higher, but eventually I dragged it down when we got near these lows, and that seemed to be pretty much correct. So over here, there is a short up here. Basically, at the time, let me just draw it on here so you can see. At the time, I basically had this range drawn. I think I had it like this. I had it drawn like that. And I kind of saw this as sort of like it was a higher high. This is a 1-2 triple test. So you could argue that there's a short here, but I don't really like that. It's just too much of a doji and you don't have a lot of space to the bottom. It has been a bullish bias. But when it breaks above here like this, that actually gave you the new high on this channel over here. So then when it goes and reverses, you could play that short to the bottom of the range. You end up not actually getting to the bottom of the range right away unless you waited until it got there, but you would have got your scalp and then you could have you would have got stopped on your runner, but it was fine. It was a fine trade. Okay, I guess. Not perfect. Anyway, breaks down. And what you get here is basically from this high, you have a first entry long pullback, and this is a second entry long above this candle that fails. So this is just here, this green arrow, it's just a failed second entry long that you're expecting a new low. It ends up not giving you that, and it just gives you a higher low. So this is one of those ones where if you were quick about it, you could actually have gotten multiple trades here. So you could have got a scalp short right there. And then you could have actually went long above this bar. And this is a higher low from here. And you kind of just have to assume that you're not going to get, you're not really going to get a new low there. And it's probably a failed break out of this trend channel, which is what it ends up being. And it does break back into the channel temporarily right there. And then it breaks back out. So it was kind of or not trend channel, range. Sorry, the range. There is another one here, which is just a first entry, second entry short that fails. And that's like another higher low. It's also a failed second entry short. So if you took that as like another way to enter on the failed breakout, you could take that one. It then comes over here. You have this channel working down. You don't have too much going on here, except you have a first entry long there, pullback, second entry long that fails. So if you took that short, that's probably okay. But again, you're risking it now. You're getting close to these lows. But if you saw this channel working and it's inside, you're still expecting it to keep going. And at the time, you wouldn't have really known that this is the low. You would have thought that maybe we were breaking down and we were going to basically retrace. So then from here, you come up, you have a first entry, second entry short that fails. And at the time, you would have had probably your range lows around this area. So it would have looked like we were breaking back into the range again. So that one was decent. It then comes up, goes sideways again. Then we have this breakdown here. Now, there's not a whole lot here. It starts to break down. You have this down channel. You just kind of have to sit sideways for a while. Now, you do get one here. That's another failure. So basically, from down here, or sorry, from up here, you have a double top. So you actually have a first entry pullback, second entry long above this candle. So this one comes up. Basically, as this one reverses, if you went short one tick below this bar and you just let it fill you there, you could have rode that down as like a quick little trap. So it's basically just a trap. All right, then over here you have a first entry, second entry short that doesn't give you a new low, but then it closes outside here and gives you basically you get a close outside of this wider down channel, and you're thinking this wider down channel was confirmed over here. So you're thinking we probably need a new low. And so you could almost see this as a wider first entry, second entry short, a little more advanced. So that's why it's marked green. It then gives you a tight down channel that goes down. You get a green long here, and this is simply a first entry, second entry long far away from the EMA. Um, if you were playing the tighter channel, this is the new low from the tighter channel. You do have to consider that there is this possible wider channel in here, so that's why it's marked green. And that looks like that was correct because then when it broke out, it did give you a new low there. So it works, but it's a risky one. Down here, you make your measured move from this range. So I have a measured move from the range. It actually gives you a perfect measured move. And then you get a first entry, second entry short. So that's all that is. It's a close outside of this trend and a new high, and it's a second entry short. It ends up rocketing down pretty quickly for the scalp. Then after that, pretty much goes sideways. This range high becomes, that's why I said this is almost like a wider range. The measured move plays out pretty much perfectly on there. And then you end up pretty much just sideways. There's not a whole lot in here. I don't really see any trades until over here, which you get this breakdown of this tight range. And basically, this is just a first entry, second entry long. It's also a close outside and a new low all at the same time. So you're expecting this to probably at least come back to the EMA, which it goes a little further. So if you took this trade, you probably got a runner, depending on how this one played out. And that's pretty much all I saw. There's not too much else today. It was pretty much a wild day of price action. And again, the volume's a little lower than you'd expect. So I did want to call that out. You know, this is one of those days where the tick chart is a little slower than normal, but that helps tell you something. It tells you that there's going to be some bamboozle type moves because that tends to happen on days where the liquidity gets a little lower. So I'm going to wrap it up here, and I'll see you tomorrow.